Well, good afternoon. Good afternoon. How are you, everybody? Nice to have you join today on such short notice. It's September 21st, 2023, 12 p.m. Eastern Standard Time. The market's been open for a little bit. And I just wanted to check in with you guys and take a look at what's been happening in the markets. Some very interesting moves, as you are well aware. Interesting what took place in the markets with the S&P, the Dow, Nasdaq, the big drop that we've been calling for quite some time. And hopefully you guys took some trades. I mean, I've been getting messages from you guys left, right, and center about trades that you took. You made some good profits on it, and I am very happy for you guys. S&P, nice drop we got here. And, you know, we've been talking about this for quite some time. The reason for the drop, right? So, let's just close off some stuff here. There we go. So, you know, we've been pointing out for quite some time, and this is one of the reasons why doing supply and demand analysis is so essential, at least as far as I'm concerned. Because if you don't know what's going on in the markets and you don't know what the banks are doing with their positions, and you don't know where they are selling, where they're interested in selling, where they're interested in buying, then how do you know what the overall theme in the markets is going to be? How do you have any idea what's going to take place? Now, you know, up here on the chart, you can see that we had drawn a supply area. This is an area that we believed when price rallied up into it, the banks were going to be interested in selling the market. Okay? They were going to be interested in selling the market. And this would eventually cause the market to drop, right? And so over the last few months, we've been looking at the headlines, looking at the Wall Street Journal, and CNBC, and Business Insider, and Bloomberg, and all those. And we know that the bankers own all those media corporations, right? So if the bankers need to offload massive positions, then what do you think they're going to use with their media outlets for? It's to help offload those positions. And so, you know, as price was rallying up into this area of supply, we saw a lot of bullish headlines regarding the stock market. A lot of bullish headlines. And price rallied up into supply. And who was taking the long positions off the bankers? It was retail traders. As price was coming up into this area of supply, retail traders were buying the market as the bankers were offloading their positions. So now we're starting to see the initial move to the downside. Okay? This is just the beginning, as far as I can see it. This move is just the beginning. All right? But we were able to pinpoint this move on a lower time frame because of what was taking place. So to detail and to discover what has been taking place, let's take a look now at the weekly chart. Okay? Because here is the big area of supply that we have mapped out on the monthly chart. Right here. And within this area of supply, we have a weekly area of supply. Right here. That came into contact. Right? So here's what conventional technical analysis would refer to as a double top. Right here. 2 points. Now, do you understand why there's always 2 points, or usually there are 2 points in circumstances like this? Do people understand what the double top is all about? What it really signifies? What's really going on in the markets? What's really going on in the markets is the banks are taking long positions. They're buying. Okay? That's what causes the market to go up. And then when they decide to offload some of those positions for profits, it causes an initial move to the downside. But eventually what they end up doing is they end up pushing price right back up to the highs so that they can continue to take more of those positions off. Okay? So there's the first load of positions that they close, and then there's the second bunch of positions that they offload. And they want to offload them at the highs here. They don't want to offload them at the lows. They want to offload them at the highs. And that's why they push price back up like this. That's why the headlines in their newspapers come out and make it seem as if the market's extremely bullish. Because you need to instigate traders to buy the market. Okay? And as they're buying, they're taking on the long positions of the banks. So that's why you get those double points like that. So when you look here at the weekly chart, you can see that's what took place. A rally up into supply. And look at the bearish engulf here. What's a bearish engulf? Bearish engulf is price was ranging on a lower time frame and then it broke out of the range to the downside. Right? Why do you think it's ranging to begin with? What do you think is happening in that range? Ranging is usually onloading positions or offloading positions, right? In this case, it would be offloading. Hence why you have the bearish engulf. Offloading, long position, down. Back up to the area where they were offloading and then back down. Now, let me show you something really interesting here, okay? Really interesting. So, we're talking about the double top here on the weekly chart. Now let's go to the daily chart, because this is what we were watching for. So, do you remember where Fitch cuts the U.S. credit rating? It was right here. Okay? And that's what started this big drop in price, was from that area. So we had the big drop. Now, looking at the charts through the dynamic of supply and demand and the institutional buying that comes into place. Remember, I told you as price was rallying up, what was taking place? The banks were buying, right? Okay. So this was buying and this was buying, all right? And what did I say they were doing at the highs? Profit taking on those long positions, right? Okay. So let me show you something quite incredible. So you can see the accuracy that you can get in your trading when you're using supply and demand concepts and principles that we teach at the school. So on the way up, the banks were buying. And so they have specific areas where they really start to accumulate long positions. And here was one right here, this area. So we located this area of buying from the banks using concepts and principles that we teach at the school. We apply these concepts and principles to the charts, and we are able to discover the exact areas where the banks are accumulating massive positions. So when they're accumulating a long position, they cause price to rally up. If they are going to start taking profits on those long positions, it doesn't take much for a price to drop from those highs back down to those areas of demand. Okay, those areas of buying. Okay, so buying was taking place here, and then profit taking was taking place at the highs. So what could have happened, and I'll use some brown arrows here, is that price could have contacted this institutional buying zone, and price could have rallied back up to that area where they were taking profits on those long positions. Could have done that. But the interesting thing is that when price was dropping from the profit taking on the long positions, what happened was this area of buying was removed. Okay, they removed the area. And I'll use a orange arrow to point to that removal. Okay, as you can see, price dropped, right? And they removed that buying area. So this is when the Sherlock analysis process comes into play. Because why do we call it the Sherlock analysis process? Well, Sherlock is known, if you've ever watched any of the Sherlock movies or Sherlock TV shows, Sherlock comes onto the scene, and it is his job to look around, collect evidence, use his knowledge from discovering, from solving many different crimes in the past and solving many different mysteries in the past. He's using his knowledge to discover the truth about a situation, and he's examining the situation, and he's collecting the evidence, and he's thinking through it. He takes out his pipe, he closes his eyes, and he thinks through the process. He thinks through the problem to come to a conclusion, a logical conclusion of what the solution is. And so when examining this chart, and we saw how price was coming down to this area of demand, like I said, it could have used this demand to facilitate a move higher. But as indicated by the orange arrow, what actually took place was this area of buying was removed. So what ended up happening is, after deep contemplation as to why they would be removing this area, it led us to conclude that they were likely going to start heading price much lower. So immediately after they removed this area of demand, they brought back price right up to this area. Okay, this was a selling area, an area of selling that forced the market to the downside. Price came up, contacted that selling area, dropped right back down. Came right back down to those previous lows. Then it turned around, started rallying up. Okay, and as you can see, it eventually removed that selling area. Now, based on the formation of the candles here, we were examining this. And again, these are concepts and principles that we teach here at the school. We were examining this price action, and we knew immediately that we had to go and look at one time frame lower. That one time frame lower was going to reveal to us what was taking place on this chart and why. So we did. This is the daily chart, and we had to bring it down one more time frame, down to here. This was the 2-hour chart. All right. So again, going back, let me do something here. I want to show you something here. This is the 2-hour chart. And if I bring my cursor down to this move to the upside, you'll notice that this move here, this move up, is this move up here. Okay? And like I said, because of the formation of candles here on the daily chart, we knew we had to look to the 2-hour chart for the answer of what was taking place. And what we were able to discover was this really important area of buying taking place on the 2-hour chart. So what does this mean? Well, buying and selling takes place on all the different time frames. Meaning sometimes the banks take a month to accumulate a long position. Sometimes they require 6 months to accumulate a long position. Sometimes they only need a couple hours. Sometimes they only need a few seconds. Sometimes they only need a couple days, okay? A couple weeks, right? You get the point. Depending on what they're doing and what their goal is and what their agenda is and where along the storyline price is in the overall agenda to push price in a certain direction, we have to focus on specific time frames, because those time frames are the ones that are going to be the ones that will give us the trading signals, or the signals of where price is deemed to go under a certain time frame, okay? Whether it's a short term, medium term, long term, very long term. So we immediately noticed that on the 2-hour chart, they had created a really important buying area here, okay? So let me show you something. This here was an extremely important buying area. And so let me just make it a different color so that you can see what's going on here. This is a really important buying area here. So as you can see, price was moving down, moving up, straight up, created this really important buying area. And if we play it forward, what we were watching for was, since we knew this was the weekly highs here, okay? That and going back, going back, going back. Okay. The first one being July 23. May, June, July 23 here. And the second one being this second point right here, okay? So this is the double top that we are watching on the weekly chart, okay? Now stick with me, man. You're really going to see this. I want you to have your eyes opened to the truth of how the market works here, because once you see this, you'll never want to see the markets any other way, okay? Once you see it this way, you'll never want to see it any other way, because it's just so, it just makes so much more sense than anything you've ever seen. And the accuracy in which you can trade is phenomenal. So this was the first peak on the weekly chart. Now price is rallying back up for that second test, right? That double peak. And as it went up, remember what happened. It removed a very important area of supply on the daily chart. But because of the formation of candles, we knew we had to look at the 2-hour chart. And that brings us to this moment right now. So we have this demand area. So what this is telling us is, listen, this is a roadblock, okay? This is a roadblock. And depending on how price reacts to this roadblock will give us a determination of what is likely going to happen. Meaning if price comes down here and starts to head up and removes this area here, then price is likely to continue higher. But if price comes down here and removes this area here, price is likely to continue lower. It's plain and simple like that. Okay? But we knew that the bias was to the downside. Why? Because of what I showed you on the monthly, what I showed you on the weekly, and what I showed you on the daily. We knew the bias was to the downside. But the key signal was to watch to see what happens with this area. So let's play it forward and see what took place. So price hit supply. As you can see, you see that supply area that we had drawn out? That's the supply zone, okay? That's the area of selling that we found on the charts, okay? You see the drop from supply? That's institutional selling that's taking place here. This is their supply area that they created. Price rallies up, contacts supply, okay, the doubled eye. Okay, the double top on the weekly chart. Now it's coming back down towards this area of demand. So the key thing is, what's going to happen with this demand? That's what we were watching. What are they going to do with it? They came and they tested it. Did you see that? See how they tested that? They dropped price right into that area of supply, and then buying starts taking place. But we're still watching to see what's going to happen. Are they going to build momentum to the upside, or are they going to build momentum to the downside? So we're watching it as it moves. And we see them starting to build momentum to the upside, approaching that supply up above. But remember, for price to go higher, that supply needs to be removed. For price to go lower, this demand needs to be removed. It's a roadblock. So they bring it right up towards supply, drop price down, and then they based price. Basing. Remember, basing is ranging on a lower time frame. It's usually an accumulation or a distribution of a position. In this case, we recognize it as being an accumulation because then price dropped really significantly. Okay? Price dropped really significantly. Look at that. Did you see that? Do you see what happened here? So I posted this on Twitter. If you follow us on Twitter, you saw it. If you follow us on our Telegram channel, I posted it. And I hope everybody was paying attention because I really wanted everybody to see what was about to happen. So they removed that area. And what did I just finish saying? That if price was going to go lower, they would need to remove this area. If price was going to go higher, they would have to remove this area up here. And so what they've done now is they just broke through that roadblock. That was the roadblock causing price to stay up. They removed it. Now price can drop. But the area of selling originated here. Okay, banks came in, and the origin of the massive selling that was used to break through that roadblock was right there. Okay, so why do you think price was rallying up now? Okay, price is rallying up right leading to the news release. Leading right into the news release. Watch what happens. Slowly. You see that? See what's going on there? You see how price rallied up exactly to that exact supply zone that we had drawn? The exact supply zone that was responsible for removing the roadblock. The origin of selling from the banks was right here. And then price came right back up here. Remember I told you all they needed to do is remove this demand zone that would open up a move to the downside? Right? Well, price rallied back up into that area of supply. And lo and behold, this is what ends up taking place. Okay? That's accuracy right there. Okay? That's exactly what took place. So you see what's going on now, right? The roadblock was removed. Price came back up to the exact location where the banks were accumulating a short position, and then they dropped price. And that's what we experienced right now. So you see how incredible and accurate your analysis can be. You see how now it's starting to open up your eyes to what is really taking place. I mean, don't pay attention to the media and what the media has to say, because the banks are just writing those articles in such a way to get you to think a certain way. Okay? It's not helpful to your trading. It's not going to give you any special insight unless you know how to read through it. Now, what's next on the agenda? Well, I can tell you that we have a demand area down here on the weekly chart. This is it right here. We're getting pretty darn close to it. And I suspect that when we get here, we're going to see a reaction to the upside. So this downward momentum is still in play, but it's going to be short-lived, because when it comes down to this area, it's definitely going to end. We're going to come into some resistance. We're going to see a move to the upside. Then after that initial move, what do you think is going to happen? Likely, the banks will come in with selling. They'll create more of their supply zones. They'll remove more obstacles. they'll head back down and then eventually head much lower. That's what I see coming, okay? Because everything that I'm spotting, okay, the double top into massive supply, the removal of obstacles keeping price from dropping, which allows price to drop, rally up into an area located on a 2-hour chart, the exact supply zone that price used to drop price. This is all to help facilitate a move down here. Once this comes into play, we expect some kind of a move to the upside, and then we'll be watching the lower time frame charts. We'll be tracking the supply and demand created by the banks as it reacts to demand. And then we'll watch them build their roadblocks, and then when they remove them, guess what? They will create very specific areas of selling that's going to help to facilitate a move like that. Okay? So that's what I see coming in. And we've been pointing this out for quite some time with respect to the massive supply that is in play, that we were expecting price to drop in these markets. I even pointed out many tech companies, how the insiders were offloading their longs, okay, their shares, offloading their shares. Nasdaq is no different. It's the same thing. Okay, dropping from supply, first contacted demand. Like, do you think it's a coincidence that price rallies when it contacts an area of demand? No. You think it's a coincidence when price contacts demand and it rallies? No. Now we're coming back into that demand area, as you can see. That's a roadblock. So what do you think we need to watch for with respect to that roadblock? Once the roadblocks are removed, that opens up the pathway to the move lower. But if you can't locate the roadblocks, you don't know where moves are going to happen from. You get in short because you see momentum to the downside, but you don't know where the roadblocks are. If you don't know where the roadblocks are, how dangerous is it to open up a short position? You don't know if that momentum to the downside is going to continue or it's going to stop. So Nasdaq, pretty much the same thing when you take a look at what's going on in the charts. Okay. And then we have the euro. Okay. Yesterday I posted, because some of you wanted to know, right? It was the interest rate. Okay, interest rate news for the US dollar. And I posted this tweet right here. As you can see the moment that I posted the tweet, because Twitter has a feature where you could just copy the tweet, paste it on your chart, and it'll point to exactly where price action was when you made the tweet. So some of you asked, what do you think is going to happen with the markets? Now remember, your average person, where is it? Here it is. This is what I'm looking at. This is the chart. Your average person has a chart like this, price action, right? Looks random. Anybody looks at this chart, they're like, oh, it's random. Completely. You know, up, oh, even more, or oh, down even more, oh, now it's up even more, oh, now big down, oh, a little bit up, a little bit down, a little bit up, more down, a little bit up, more down, a little bit up, down, oh, down more, a little bit up, down more, a little bit up, down more, a little bit up, down more, oh, now more up, now more, oh, no, now more down, down, a little bit up, a little bit up, a little bit down, now up. Who would have known if it was going to go like this? Or sideways, right? How does anybody know what's going to happen? But we got to this point here. And some of you said, what do you think is going to happen here? So I came out with a tweet. Dixie, US dollar interest rate decision coming out. So how will the market react? Crystal ball. Euro US dollar initial reaction will be down. Initial reaction will be down. Then afterwards, when it settles, it'll be up. Which is what we're starting to get now. Okay? Look at that. The move down called before it took place. Now, did it matter what the reaction was going to be? What the expected reaction was going to be? Did it matter what the interest rate was going to be? If they cut it, if they increased it, if they kept it the same, if the news articles said that it was going to be the worst thing for the dollar if they kept it the same, or if they said it was going to be the best thing for the dollar if they kept it the same, the euro would have dropped regardless. Okay? Now that's the beautiful thing about supply and demand analysis and knowing how to forecast where price is going to go, because it doesn't matter what the data is, what the number is, what the media says, what the experts say, what the consensus is, what the expected outcome is. It doesn't matter. What's going to happen is going to happen, period, based on institutional buying and selling, period. Okay? That's why I can make a prediction and say initial reaction to the downside. Because we were inside a supply zone. And what happens to price when it's inside a supply zone? It drops. Okay? Within certain contexts. Because not always does every zone hold, right? And I get this question all the time. Well, how come some zones don't hold and some do? Well, because you have to understand the context of where price is. You know? If it's on the way to 2000, if something's on the way to 2000 and there's a small supply zone at 1,955, it's going to be taken out because price has a goal to get to a certain place. So if there's small little roadblocks in the way to price getting to where the banks want to put it, it's just going to trample through those roadblocks. Now, sometimes it'll use those areas of demand to facilitate a short-term move in the opposite direction, only to eventually get back into gear and continue price in the direction that it was originally heading in. That does happen. You have to know when those times take place. Okay? But as far as what's happening with the euro, this is my prediction. That the initial move would be down, and then eventually we would see a move to the upside. Now, why a move to the upside? Well, this is where the Sherlock analysis comes in. You have to understand context. Context is always so key. And we know that the banks are offloading long positions, right? That's what they've been doing. That's what we've been calling for ever since up here, right? That the banks need to take profits on long positions, which was going to fuel a move to the downside. And so that is what's taking place. Now, remember the initial move right here off the trend line that we called? Again, another perfect call. The rally up from the test of the trend line. Okay, so now we're continuing down. Now, if you look at the positions held by retail traders, they went back long again. Yes, we know that. Why? Because the banks are offloading those longs to retail traders. That was the purpose of luring them in with this rally. So, as far as I was able to see just a few minutes ago when I was looking, they're still long, and they're about 78% long. Okay? So, just thinking rationally about it, logically about it, if they're 78% long, then they're going to get to a point where they're maxed out on longs. So they're going to have to offload those longs once again, just as they just finished doing. They offloaded some, but not the full amount. So they're going to have to offload again, and it's going to have to hurt because they're going to get into short positions. You know, their retail traders are thinking, oh, we just surpassed the previous lows. Good. It's a good sign. New lows are being created, right? Why are they thinking this way? Well, because all the trading textbooks tell you that. New lows. Oh, okay. So it's breaking through areas that, you know, were previous lows. They're breaking and coming in with new orders. No, that's not what's going on here. They're creating the chart formations to trick people into thinking that price is going to move in a certain direction. So when they start aggressively offloading those long positions and they start getting in shorts again, then I suspect that we'll see a longer, more sustained move to the downside begin. But until that happens, move to the upside. Okay? That's why I said yesterday, initial move will be down because it was contacting supply. And then the following move will be the move up as retail traders offload long positions and get into shorts. Okay? So far so good. The move down was called perfectly. Now we're starting to get that move up. Now, where is it going to move up to? Hard to say. Maybe to the trend line, maybe further, maybe not even get up that high. Who knows? Maybe it'll get up here to the supply area up here. It's difficult to say because we're not dealing with the banks accumulating a short position. Because if that was the case, I would be able to pinpoint the spot with high degree of certainty. But because it's offloading of positions, it makes it a lot more difficult to time where the markets are going to go. But overall, we're expecting more downside, okay? They just have to position themselves and be able to shift enough of their long positions back to retail before they continue to push price lower. All right, let me see some of your comments. Good morning, good morning. Great call on the US 500, Kevin, this week. Thank you, sir. So that's about it. I just want to touch base with you and point out to you what is taking place, why it's taking place, how come how was it that the prediction that I made is coming to fruition? How did I know that? And just give you an idea of the importance of supply and demand and tracking it and being able to and using it to help you determine what price is going to do in the future. All right, ladies and gents, I hope you enjoyed it. Thank you for joining me, and I'll leave you at that. All right, take care, have a good one, and be safe. Take care.